Do you ever wonder what your financial advisor isn't telling you or how the markets really work? With just an hour a week, you can take control, earn a few $100s in passive income, and finally put your curiosity to work. We break down what's trending in the markets and give you the tools to actually understand investing and trading. No jargon, no stress, just money moves. Let's go. Hey there, money making friends, and welcome to what I hope is the first in many of a series around learning how to trade and understand the markets. This is designed for those of you who've probably been sideline investors for many years, and you've either invested in your 401k and your long term investments, but you've handed off the decision making to your financial advisor, or maybe you've just stuck with a bucket of diversified mutual funds. Either way, you've probably been a little curious about what trading can do for you. And you're not wrong. With less than an hour a week, you can make a few $100s in passive income just to start with. So join me. Let's dive in and learn a little bit about the markets and get started with trading. And this week, we're going to cover three very relevant topics: presidential inaugurations, Republican administrations, and how to play first quarter earnings. Come join me and let's go. First up, let's talk about market movements around a presidential election and inauguration. Volatility is the name of the game here. Markets often experience a spike in volatility around inaugurations and elections just because there's a level of uncertainty around policy and there's a level of optimism, but with some unknowns. When it comes to a Republican administration, the Dow Jones, which is a tech-heavy index, tends to gain in the months after a pro-business Republican administration takes office. Republican presidents often boost sectors like oil, defense, and manufacturing due to deregulation and increased government spending. In particular, as of the timing of this video in January 2025, President Trump just took office, and he's known from some unexpected moves and unscripted comments that tend to move the markets and create volatility if or until we determine how much action or how quick of an action is behind those comments. For example, his campaign was poignantly marked by strong declarations around reshoring. This is a jargony word that means bringing a business's operations that were moved overseas back to the U.S. But he was a little bit mum about these topics on Inauguration Day and pretty vocal about some other topics like Biden's pardons prior to leaving office, and he signed legislation recognizing two sexes. That's A-OK. But things like gender policies and pardoning people for old crimes don't drive our markets. Imports and tariffs do. And clearly Trump was looking to not upset the markets on Inauguration Day. So what are our trading tactics right now? We're going to be careful around short-term trades and options that can quickly go south based on comments. We focus on sectors that Trump wants to boost during his first month or two in office. Things like big tech and the defense sector should do well out of the gate, often led by companies like Northrop Grumman, stock symbol NOC, Lockheed Martin, LM, or Boeing, BA, and oil and gas companies like CNX, Enbridge Partners, ENB, which transports about 20% of all natural gas consumed in the U.S. and typically peaks during cold seasons as it is. As for options, I'm playing a little bit longer these days, knowing that my favorite weekly trades on stocks like NVIDIA, AMD, and Google could swing at a moment's notice based on a tweet or a comment that could have a pretty dramatic effect on something like a weekly option versus giving myself a more of the 30 to 45-day expiration dates and a little more breathing room. And if you have a stock that you feel is fundamentally strong in any of these areas, go ahead and start averaging in or selling an at the money or slightly below the money put option. The other thing to always keep in mind is that expectations are priced into the stock market. This is known as the expectations gap. Stock prices don't just reflect performance. They reflect how results measure up to expectations. So if the market is overestimating growth, even strong performance can lead to a sell-off. Pay attention to early policy announcements. Markets often move in anticipation, not actual legislation. And lastly, we have upcoming quarter earnings season upon us. Now, earnings come out 4 times a year, typically starting 2 weeks after the end of a quarter. So I'm recording this the third week of January, and we've just started receiving some of the fourth quarter earning reports, which finished up on December 31st. Now, first quarter earnings are often robust for consumer spending, with companies in retail and e-commerce like Amazon and Walmart raking in over the holidays. Likewise, though, earnings seasons can bring uncertainty, and this creates prime opportunities for trading plays. Think beyond big retail and consider things like shipping and logistics companies and semiconductor stocks tied to consumer electronics. Make note of earnings dates on companies you like. And if there's a lower than expected report, it can be a great buying opportunity on a dip the day or two after earnings. Remember, if it's a good stock that is fundamentally sound, a dip shouldn't scare you. It should feel like something you want that just went on sale. And prices often quickly snap back from exaggerated reactions by other investors, such as a single day sell off. If you trade options, you'll see heightened volatility for expiration dates just beyond the earnings date. And you'll either want to choose contracts that expire prior to earnings, or again, if you name your price and you think the stock is going to grow regardless of the announcement, then go for the earnings play. And you can rake in some great premiums for selling puts with as little as 15 or 20 delta, which you can think of like a 15 or 20% risk of assignment. Just be prepared to get assigned on that stock if there is a dip, and know that you'll own that stock at your strike price until it recovers and you can start making growth on that position, or you're able to start selling covered calls and roll out of that position after earning more premiums. So hopefully you've grabbed some nuggets around how this market is looking on the heels of a new administration and the beginning of what looks to be like another strong year in the markets. In fact, in 2021, the stock market saw its best 100-day performance post-inauguration in history. While past performance does not predict future results, it shows just how influential politics are on the markets and why understanding these dynamics can give you an edge. If you found this helpful, hit like and subscribe, and let's keep building your passive income empire 1 hour at a time.